Alright guys, welcome to my channel again. This is Freddy FX speaking. I would like to warmly welcome you guys to this new channel I created some days ago to spread out information to as many people as possible. I would like you to do me a favor, please and please and please kindly subscribe to my channel, please. Alright, with that being said, let's dive into the video of the day. Yeah. So in today's video, I'll be showing you guys a simple strategy of how you can turn that your $20 account, your $30 account, your $15 account into a big, huge amount of money within a short period of time without any indicator. All right. I'm not here to tell you to go and start looking for your moving average to put on your screen, to start looking for any RSI or some, you know, any indicator at all. This strategy does not require any indicator. All it needs is just some simple levels and key levels of identification and then a simple trend line. All right. So uh, without further ado, let's dive into the video of the day. Okay. So now, if you're having a $20 account or a $10 account or a $15 account, what will come into your mindset is how to scalp the boom and crash. Scalping a boom and crash is not a bad thing, but how to scalp the boom and crash is rather the problem for many traders that I see recently. All right. Most of them do these things that are very, very wrong in the boom and crash system. They just go ahead and look for a position. All right, maybe they have plotted or they have added a particular indicator in the chart that tells them to, you know, buy when X crosses Y or to sell when Y crosses X. Then they just put their whole trust into that indicator and then buy into the market with a very huge amount of lot size. That's why you see somebody with a $20 account be using a standard lot size to trade boom and crash, which is very, very, very bad as a trader. If you practice or if you do that kind of thing, I will advise you to stop it this moment. Else, you're going to be blowing your account upon account. This is a kind of scenario where you see yourself in a position where you fund your account today, tomorrow it's blown up, you go and look for another money, fund your account. You can never be successful with that kind of a strategy. Now, let me tell you the reason why, okay? All right, so basically, most times when you're using those kind of indicator, what you'll be looking for is to buy or sell into the market and get like 5 to 6 candlesticks and then you are out. Let's say you're using a standard lot size, a one lot size to trade boom and crash system, right? Then if you enter a position here, up here, let me use a trend line so you see it. Let me use a straight line. Okay, so if you enter a position here and then you're looking for 5 candlesticks, this is what you'll definitely be getting. All right, here you're looking for a little time, you want to stay a very short time in the market, so you're wanting to buy and get 5 candlesticks. When you get 5 candlesticks, you're out of the market. That's what they want to make you understand. All right, so let's use this for an example. If you're trading to get 5 candlesticks from here, this position here to this position here, you definitely might get it. And then these candlesticks, each of them, if you're using a standard lot size, each of them might be giving you around 50 cents. All right, so 5 candlesticks is giving you roughly $2.50. So if you're doing this thing for the market, it's not every time you're going to be jumping into the market, because the indicator is going to tell you to buy when this crosses this, and before you're going to be waiting for that position to buy when A crosses Y or when Y crosses A. You will not have the position to trade several times. All right, you might not have the option to trade several times because number one, your fear is going to set in. Okay, so when fear sets in, you will rather be displeased. So this is why most times if you're wanting to look for five candlesticks and then you get this position, you're out of the market, maybe you come to this place and then you trade this position, you're out, you trade this position, you're out. There will be a time when you get positions like this. You get situations like this when the candlesticks might not be up to five, and then you see a spike happen, and then the candlesticks might not be up to five, you see a spike happen, another candlestick, three, four, then you see another spike continuously that way to the upside. Now, this is a simple mistake that people make that cost them a lot of money. And then at the end of the day, they will start blaming boom and crash or start blaming the derivative system, thinking that derivative are manipulating the system. They are not. You're the one that is killing yourself with a wrong information. All right. Now, how to trade boom and crash properly, how to trade boom and crash and make some amazing amount of money. It's just for you to forget about whatever is happening on the 1 minute time frame. Okay, that is rule number one. Forget whatever you're seeing on the 1 minute time frame. Pretend they doesn't exist. Now all you have to do is to go over to a bigger time frame. For me I use the 5 minutes or the 15 minutes time frame. 15 minutes time frame, if you're a scalper, right, then take your entry from maybe 5 minutes time frame and then thereabouts. Now switching over to the 15 minutes time frame here, you see a clearer picture of the market. All right, you see a clearer picture. You know when the market is trending to the upside or when the market is trending to the downside. Now this is one thing I want you to do. If you're a trader and you believe in trading in boom and crash, all right, delete the idea of selling boom, be it boom 1000, boom 500, or boom 300. Delete the idea of selling boom first from your mind. That is how to succeed. And then delete the idea of buying crash from your mind. Delete the idea of buying crash. Delete the idea of selling boom. Now, if you go over to the 15-minute time frame, this is what I want you to do. First of all, look at the current position of the market. All right, what is this market doing? It is trying to form or create a trend. Now, what you'll be trading is trend breakouts. All right. For example, let's say you come to this market at this point, you find out that there was a trend line here. There was a trend here happening here. This is clearly a downtrend. Okay, this is clearly a downtrend of the market. This is clearly a downtrend. Now, like I said before, you'll be trading trend breakouts. Trend breakout. Now, this market, you'll notice that this market was at the top here. It was down here. It came up to this position here. It reversed back to the downside. And now trend lines are valid if they touch a particular spot 3 times. If they touch a particular spot 3 times and then they respect that spot, you can take action on that spot. You know that that spot is an area of interest, that when the market reaches there, it's likely going to make a reversal. Okay, so now if the market got to this point and then it reversed back to the downside, came up also and didn't get up to the trend line, it reversed back, then it came for the second time, touched the trend line here, it respected the trend line and reversed back to the downside. Now the fourth time it came to the trend line, but this time it didn't respect the trend line. The third time it didn't respect the trend line. Instead, it broke up to the trend line. It broke the trend line to the opposite direction, like to the upside. All right, so now this is where you take action. You take action whenever the candle that breaks the trend line breaks. And me personally, I look out for the candle that has a very big bullish momentum, like here. If you look very well, you see that this candle, it was very big and it was very bullish. All right, so after the closure of this candle, that is where I take my entry point. All right, so this point here is where I usually take my entry here. somewhere around here. Let's say I take my entry here now. I'm targeting um a particular take profit level. Okay, so usually my take profit level overall should be somewhere around here at the previous high. Okay, at the previous high. Now this is what I want you to do. If you're trading boom and crash, you should learn how to set your stop loss. The reason why you think boom and crash just don't respect stop loss is because you place your stop loss at an unbearable position. You cannot be trading boom and crash and then you're placing a stop loss of, let's say, $5, or you're placing a stop loss of 5 pips or 6 pips. You're just deceiving yourself because it is likely a spike is likely going to break and cross over your trend line, that your stop loss, or I mean to say. All right, so if you now know that you should place your stop loss somewhere that even if a spike should happen, it's not going to um affect your account. All right, so this is what to do. You come here to give yourself a good position or a good time in the market. Since my entry point is somewhere around here, all I have to do is just set a stop loss of around 20 pips. All right. So now I set my stop loss to somewhere here around 20 pips. Yeah. So let me mark this position out. My stop loss should be around here, 20 pips, around somewhere here. Yeah. So if my stop loss is here, my take profit zone should be somewhere here, right? Now let's measure how many pips is this take profit zone. Yeah, 60 pips. This should tell you that this is a trade of around, the risk to reward ratio is around 1 is to 3. So it's a very good trade. So if this trade should go against you, you're losing a 20 pips. And if the trade should go in your favor, you're gaining a 60 pips, which is around 1 is to 3 risk to reward ratio. Okay. So this is basically how to trade the boom and crash using your trend line, simple trend line that can actually change your mindset. And here you don't need to come and start using your one standard log size. You can use a the minimum log size 0.2, and then you can use 0.5, 0.3 to test the strategy on your demo account. Now let me give you a back test of this strategy, how they work. If you come here on the current position of the market, you see that it actually is working also here. It's working currently here now. You see a break of trend. This was a downtrend, proper downtrend that was broken. See it? It broke and then it's pulling up to the upside. All right, it's breaking a trend right now and then it's going to the upward direction. Let's go back and back test this particular strategy. You see that it works everywhere. It works everywhere. It works everywhere. Very simple. It works everywhere. The same thing happened there. The same thing happened there. See? See it? You see it? It broke and then it's going to the upside. It broke and then it's going to the upside. The same thing happened here. The same thing happened here also. It broke the trend and it bought. It broke the trend and it bought. The same thing here. Also, the same thing here. It broke and it bought. You can find it almost everywhere. You don't need to be rushing the market on your 1 minute time frame and then you'll be losing your money. You can just be using this strategy and then be doubling your account on a daily basis. I've used this strategy for close to a year and it's working perfectly. All right. So with that being said, I hope you pick some valid information from this video. Right, if you do, please like the video and subscribe to this YouTube channel. So turn on the notification bell to get alert on whenever we post a new video. All right, thank you very much for liking, thank you very much for subscribing. Bye for now and see you in my next video.